Hunter Horsley, good to see you again, my friend.
It's great to see you.
For people who are not so familiar with you, just give a bit of background, what you do now, and a bit of your journey here, because I think it's always nice to contextualize it.
I feel like I'm an ancient crypto person at this point. In the year 2022, I feel like we lived, 100 years of crypto time. But
that was in the last week alone.
That was last week, yeah, and then another before that. I'm Hunter Horsley. I'm CEO at Bitwise. We're one of the largest crypto asset managers. We've been doing it for 5 years now, or thereabouts, which is pretty extraordinary. Bull market, bear market. We were there for 2018 when crypto pulled back 80%. We're here now, and we manage a suite of leading crypto index funds and crossed $1 billion in assets. Grown the team on it and so on and so forth. But that's
so how the hell did you get into this in the first place? Why on earth did you take the pain of starting a crypto asset management firm?
Yeah. I feel like crypto is sort of this prism, and depending on the vantage point you look into it from, you see different things. So, a lot of people in capital markets and asset management, you see digital gold, you see a new asset class, you see a new clearinghouse or payment rail. Then there's the sort of tech lens, right? A lot of people in the Valley who look at it and say it's a new platform. Maybe it's the new computing platform. And then I think there's a cultural angle as well, which is the group of people who say we're done trusting central authorities and institutions and corporates. And so there's a bunch of these different lenses. My starting point lens was the tech lens. So as you know, Raoul, I was previously at Instagram building software, at Facebook. And so that was the vantage point I had in sitting in the once great city of San Francisco, looking at the space start to sort of go from something that was an interesting peer-to-peer cash system to something that looked like maybe some bigger than that, maybe the next computing platform that would sort of follow in the legacy of the PC and then the web and then cloud and SaaS and then mobile. So that was what we saw, and I guess just to bring that to a point, we were looking at the space in 2017. Me, my partner, who's our CTO here, who did software security in the military, and we said, this thing has risks. It's not guaranteed to go into the best version of its future, but we think it's also a way in which the world could be drastically better and different 20 years from now. And wouldn't it be great to be part of stewarding that space and helping people understand it, access it, contributing to it? So we got started in 2017, coming from that point of view.
So I think there's a lot of relevancy because people are new to the space. They're not very fully aware and used to the cycle, what it feels like, and what the role it actually plays in the bigger adoption picture. So talk through a bit about setting up in 2017 and then going straight into 2018.
Oh my gosh.
Because I've just done this journey, by the way, because I set up an asset management business, a fund of hedge funds.
Yeah.
So we launched somewhere near the high, just because so happens. And obviously, and now here we are in the crypto winter, which is lovely. Yeah.
Gosh, 2017 today is such a leap forward. And I think sometimes we get very focused on what's happening in any given month. But just to paint a picture, in 2017, I raised a $4 million equity round of capital to start the business. Coastal Ventures, General Catalyst, a few others. And we couldn't get a bank to let us open a bank account to take the $4 million. Because we were deplorable. We were a crypto company, and nobody wanted to even hold that cash. Coming from a KYC, institution, it's a wire. We're not talking about holding. They're not funding us in Bitcoin. They're funding us in cash. As you know, in 2017, just to illustrate sort of that moment in time, almost the entire crypto industry banked with one bank in a town in La Jolla, in California that most people haven't heard of, called La Jolla, which was Silvergate. And we had to get a letter of recommendation from Naval. We had to wait 2-3 months to get onboarded, and then we could finally have a bank account. And I never thought that would be like a hard part of the journey. So that was sort of the state of play in 2017. And it was like that across the board, right? I don't know, you remember MG Stover, Arthur Bell. There was just a small set of constituents that you could work with. Kingdom Trust was the main custodian at that point in time. And so we were trying to navigate all that. And as you pointed out, we got going in 2017. And then we launched the Bitwise 10, which is to today the largest publicly traded cryptocurrency index fund in the US. It trades today with ticker BITW. But anyways, when we were getting going then, we brought that product out. And then in 2018, the market sold off and we went from, do you remember the high? What was the high in December of 17? Do you remember?
About 20,000.
About 20,000. And that was around the 18th or the 20th of the month.
That's right.
And then 2018, the punchline in 2018 is it drew down, Bitcoin drew down over 70%. Ethereum drew down over 90%. I mean, it looked like what a lot of the tech names in the NASDAQ look like right now, which is, just huge pullbacks. And I think that in some ways that was sort of the dot-com bubble for crypto. I think that a lot of, like the internet, like the dot-com, people saw the potential of public blockchains and of this space and started imagining the future. But in 2017, there were only 4,000 people working on this category worldwide. So, just as one measure of how nascent it was. And so I think that reality sank in. We got sort of the bubble popping, and that was sort of the journey.
How
in 2018.
did that feel at the time? Did you feel like you'd really screwed up and you went begging to Instagram for a job back, or did you keep the faith and focus on building and knowing?
Yeah.
Talk me through the psychology of that time.
Yeah. Well, a little anecdote. I remember I went on Bloomberg with Emily, and at some point in the interview, she said, "Do you plan on trying to get your job back at Facebook?" And I was like, "No."
We've been talking a lot about Tech Clash. You used to work at Facebook and Instagram.
Yeah.
They're in a difficult position now.
Yeah.
Given the tumult in the cryptocurrency markets, any desire to go back? I mean,
No,
is the BitLash going to continue?
I think that one of the funny things being in the space is that crypto has never felt more positively positioned. So at the beginning of next year, we'll see Fidelity launch custody. The New York Stock Exchange's sister, Bakkt, will be launching futures in custody. CME has launched futures this year, SIBO, and a number of others. So I think there are more participants than we've ever seen before, and a lot of reason to be optimistic.
And so there's a few things. First of all, nobody likes to lose money. We don't like to see value come down. Investors don't like to see value come down. But of course, there's a huge flip side to that, which is the seeds of everything great are sown before it was obvious. The seeds of Uber were sown when people thought that it was an uninteresting category. The seeds of Coinbase were sown before 2017. POLYCHAIN, which was one of the big players in that era, same story. And to get that window of opportunity as an investor, to be able to come into the market when it's not fully priced and when not everyone thinks it's a good time to be buying, and as builders, for people who are creating things and building services and businesses, I think it is, even if not something you would wish for, it is a really unique opportunity. So from our vantage point, nothing had changed about the underlying possibilities and thesis of the category. The prices had changed. But we said, all right, how do we make sure that we're doing right by our clients? And we were in constant communication, and that's something we've kept up ever since then over the years. But we kept going. And to bring it to today, Raoul, I feel the same way, which is, this because you're one of the most informed people on the space. It's hard to imagine more things going right for crypto. Especially if you contrast it to, you can't get a bank account open in 2017. We can't get the Silvergate account. Fast forward to today, I think in May, Instagram integrated NFTs with their app. That's just a small example. Obviously, State Street announced integration with Copper, Bank of New York Mellon, integration with Fireblocks, Fidelity hiring more people, Last year, the New York Stock Exchange draped a banner, a 70-foot banner of one of our funds, the Bitwise Crypto Industry Innovators ETF, across their columns. That's a far-flung future from the days of you can't get a bank account if you're a crypto company. And then, of course, below the hood, the actual products, technology, platforms getting built, which we could talk more about, is leaping forward. So not a moment we wish for, but a lot of opportunity.
One of the reasons I love your product is because it gives diversification to an ongoing theme. You know, by having an index, it captures a theme because nobody knows who the winners are going to be, what's going to shape out, and who's going to be in that index in 5 years' time. But the one thing I do know is, as you know as well, I've never seen this many people and this many smart people doing this many things all at the same time with a similar shared sense of mission. It's a truly extraordinary moment in time.
Yeah, it's extraordinary. It's extraordinary. I got a phone call a few weeks ago from a former colleague. Well, first it was a text message from an executive at one of these tech companies. So I won't say too much about it, but suffice it to say, they run a small empire, a 7,000 person team with 150 product managers, and they said, "Hey, I'm thinking about making a career change. I'm thinking about joining this thing called Uniswap. Am I crazy?" And I said, "Oh my gosh, that's incredible to hear. Let's talk about it." I of course think very highly of Uniswap, but the idea that some of these people, I mean, this individual is one of the most accomplished, effective, competent builders of software and internet services in the United States of America, thinking about switching jerseys from Web 2 to Web 3. And that's just one anecdote. Of course, if you look at the statistics, I think last year, there's this great report that Electric Capital puts out, 34,000 developers started contributing code to public blockchains, to Web3. And looking at it from the quantified perspective, the number of developers who show up to work every day to build Coinbase, one of the biggest, most important platforms in crypto, is about 2,000. So 15 times the number of developers that work full-time at Coinbase or thereabouts decided to start contributing their efforts, their precious time and talents to building this future. And that's sort of the backdrop. And of course, what people are describing when they say, the amount of human capital here is extraordinary. I think it's also one of the reasons that when you talk to people in tech, they almost have like this crazed conviction. Like they can't figure out how to articulate it to you. You're like, why are you so bullish? And they can't say anything compelling. But they just have this religion on it. And, I think there's part of that about recognizing new platforms, but another part is just when I shared that anecdote with you, when you get a phone call like that, when you see thousands of developers who could be, working at Google, deciding to work on Near or Polygon or Polkadot or Ethereum, it's pretty extraordinary. And it kind of,
yeah, I mean, I had a similar experience. Somebody called me up and said, "Listen, would you speak to one of my clients for me? He wants a bit of your advice." I'm like, "Sure." And the client happened to be the treasurer for one of the largest organizations on earth, corporations on earth, household,
wow.
One of the top 5 largest. And he's like, "I've decided I'm leaving and I want to go to Web3.
Oh my gosh. Yeah. Wow.
He goes, "I've got all the experience of being a public company corporate treasurer and I want to take it to this new space." And it's like, wow, just amazing. And I see that, I get it all the time. I'm even seeing it in the hedge fund industry. People like Dan Tapiero, Mark Yusko, Dan Moorhead, endless, one after the other, or Alan Howard, one after the other, just
Third point also, yeah.
Yeah. I mean, it's quite funny. I hadn't seen Dan Loeb for years. And suddenly I've seen him at every single event I've been to because he's deep down this rabbit hole as well.
Yeah. Him and Bob are very savvy on it. So definitely it's extraordinary. It's extraordinary to see the talent coming into the space. And I think again, the pattern match from the tech vantage point, Bitwise is sort of two types of perspectives under one roof. It's people with tech backgrounds We have a 10-person research team. We have an engineering team. Our CTO is on the board of the Nouns DAO, if you're familiar with that project. And then of course, we do asset management. We're a 70-person firm, and we spend a lot of time delivering these investment products. But we see both. I think that the mental model that I find most helpful for thinking about the space right now is to think about computing platforms, which is not a phrase that people say on a regular basis, but everyone is familiar with. They're familiar with the PC, they're familiar with the web, they're familiar with the cloud and software as a service, they're familiar with the smartphone. And I think that the analogy of the smartphone really is a helpful, there's no perfect mental model. Digital gold's not perfect, the smartphone's not perfect, you name it. That's why they're analogies. But I think it's a really helpful mental model for understanding some of what's going on right now and some of what to expect from this horsepower. Just to bring that to a point, the iPhone came out with a GPS before you had Uber. So you had to have the platform first before the developer could imagine the application that created the use case that made it indispensable. And we're seeing a huge amount of that now, and it's why it's so important that people are now coming in to build.
So, the question I always ask you is, where the hell are we with regulation? Where are we with the ETFs? All of this, because I mean, you're fighting the good fight. You're trying to help the regulators, help people understand. Yep. What's with as much as you're freely allowed to say, what's your impression of where we are?
So the first thing I would say is that everyone in crypto is familiar with the topic of regulation. It's the number one topic. I mentioned before we started that I just spent most of May traveling across the country, met with about 400 clients, advisors, and regulation was one of the top three questions.
That must have been exhausting, by the way.
There was a week where I had steak Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday for dinner. But it's exhausting. But the flip side is, there's nothing more incredible than getting to be. That's why we exist. That's why I've been doing this for 4.5 years. There's other stuff we could be doing, but we love getting to be sort of the partner that's in the thick of it, helping our smart but busy clients sort of make sense of it all to the extent we can. So love doing that. But anyways, you asked about regulation, and what I thought I would just remark is that is one of the top three questions that everyone asks about. And I would say in terms of responses, if you ask somebody in crypto about regulation, you will always get a response. You'll get an opinion. But it's important to note that different participants in the space have different vantage points on regulation. It depends on who they're overseen by, but also it really depends on if they are seeking to be regulated or seeking to not be regulated. There are some players, right, who are looking to be offshore or are not sort of proactively looking for regulations. For us, it's absolutely necessary. We're regulated. BITQ is a 40 Act investment company of 1940 regulated product. BITW is a 10Q publishing SEC reporting product. And we interact with the SEC twice or three times in the month of May alone. And we've had a pretty regular journey with that over the years. So I guess I would just set that up as my vantage point on it prior to saying any opinions or color, which is for what Bitwise does, it's important that we try to understand where the line is and make sure that we're always on the right side of that line. And we put out some commentary and things like that from time to time. Where are we at with regulation? The way I like to describe the journey is in 2017, it wasn't very regulated. That was sort of the era of the ICO. You remember the era of the ICO?
Of course.
EOS, the monster ICO, Telegram, the smart venture capitalist ICO, and everything in between. And so I think for some investors, they sort of imagine maybe crypto is this unregulated black box, and when regulators find out about it, they're going to have a field day. They're going to be, that is not really the state of play today. It was the state of play in 2017. So the way I like to describe 2017 to 2018 was if the regulator was a parent with kids, in the end of 2017, they heard like a loud crashing noise from the kids' room. And they're like, oh no, they're up to no good. And they start walking towards the room to see what nonsense is happening. And then in 2018, they walk into the room and it's a mess. Things are broken. Everyone's getting timeouts. And a lesson needs to be taught here. And so that was sort of, regulators to crypto in 2018. They walked in, hundreds of subpoenas, lawsuits. Floyd Mayweather can't promote ICOs. Something I can't remember. Paris Hilton was prohibited from promoting coins. And that sort of began, in many ways, the dialogue between regulators and the actors in crypto who want to have a relationship with regulators. And between then and now, you have the bank regulator, the OCC, having given bank charters to 2 crypto banks that just do crypto. You have the SEC approving ETFs like ours. It was the first time that they let someone use the word crypto in the name of an ETF. I don't know if you were aware of that, but they regulate the names of ETFs, and we worked through that with them, and they allowed us to do that for BITQ. They've allowed RAs to hold crypto. There's public reporting companies, so there's progress there. The CFTC has obviously approved futures on Bitcoin and Ethereum. FINRA is engaged with the space. FinCEN, the money transmitter licenses. The DOJ is engaged with the space and is chasing down criminals who use demand Bitcoin in ransom scenarios. So it is definitely wrong to have the impression that regulators are not aware of or deeply involved with crypto. They are absolutely deeply involved with crypto. That doesn't mean that crypto gets everything that it wants. But the regulators are there, and you can talk to them if you're a reasonable person, and you can try to understand how they're thinking. And they've taken a lot of these But I do think that the state of play is still, it's as if you went to the grocery store and all of the milk and dairy products were not reviewed by the FDA. And so you're in the grocery store, you want to buy milk, but you're not sure if some of this milk will make you sick. And so you're Googling, what does bad milk look like? And then you walk into this grocery store and you're like, oh, the color is a little bit off, or I don't know. And that's kind of the state of play in crypto for a lot of investors. They know that they can, get through it, but just the cognitive burden of always wondering, is this the thing that's going to make me sick? Am I missing something that everyone else knows, is so high that it limits a lot of investors who are busy, right? For most investors, 1 to 10%. They got 90 to 99% other things to think about. And so for a lot of them, that burden is still too high. I think the sort of the end zone for regulation in crypto, which would be such a great gift to the space, would be if you get that FDA, review of the milk and a label goes on and people can walk in and say, okay, I know that what I'm dealing with here is what I think it is. And I can just, pick the thing that's right for me. We're not there yet. There's still a lot of research that investors have to do, and sophisticated investors can do it, or they can work with asset managers who will do it on their behalf. That's what we obviously do for clients, is we evaluate the assets that we hold. But we're not there, but we're also we're not sort of at that early moment where they weren't yet engaged.
It feels to me that, there's a natural propensity. The space doesn't want to be regulated at all. In an ideal world, the regulators want to regulate everything, and there's a grand compromise that has to be reached. And the grand compromise, Gary Gensler starts off very harsh line. Everybody else is like, no, we're libertarians. You shouldn't regulate us at all. And there's going to be a battle over where it is. I still think that in all of this, investment product like your own, that's pretty straightforward. There's ways that should be done that makes it a lot easier for people. The individual space, they have to be really careful here, because, we've gotten to a world where the 1% have got extremely rich because they've had access to things that others don't.
Yes.
And I spoke to the chief fintech officer for the Monetary Authority of Singapore about this. I said, how are you dealing with retail versus accredited investors? He goes, listen, Raoul, we can't not allow people to participate. And our view is we need to teach people risk. So if you teach people what risk is, then they are free to take the opportunity. The US has been the other way around. And, because it's only for accredited investors, you've happened to suddenly one day you've gone from X worth to $1 more, and suddenly you're now a genius in investments. And we know that this is not the case, right? And there's not the case that somebody who doesn't have $1 million is a bad investor. It kind of doesn't make sense to think of it in the Securities Act, because what that really did was push it into the hands of intermediaries. Like, you guys are too stupid to deal with your own money, and therefore us smart guys will take fees from you to do it. It kind of doesn't feel like it will play in today's political climate. What you're doing is very different, I think, is you're saying, listen, we'll make it easy for you to do this because it's a complicated world. So we'll give you a regulated, easy to understand, liquid product that you can use. And that's great. And I think there's a perfect place for that. But that's my view, is just we have to be careful, because if you allow people to go to the casino in Vegas, in fact, you actively promote it as part of the American dream. You can't not let them buy earlier stage stuff. Right.
Yeah. I think it's a really reasonable perspective. And my hope for crypto is that for investors who want to do it themselves and have the time and appetite to understand that risk, that they have access and can. And my hope is that for investors who want regulators to put stamps on things and labels, that they're not excluded either because they don't have the time.
Exactly.
And I feel like it's a bit of that audience right now who says, I want to participate in this too, but I just don't have the time to keep up with all of this. And the access there is primarily, most of our funds are accredited investor products, and you have to, as you said, be an accredited investor. Though that is changing, of course, one step at a time. And we do have some publicly traded products today where it's more possible, but so it's not fully.
What about the? It's the endless question. What about the Bitcoin spot ETF? I'm not actually sure in the end it's as big a deal as it would have been in a bull market. But I think the space just wants it for completion's sake, because everyone feels like the futures product is suboptimal for people. Where do you think we are with that?
Yeah. Gosh, I feel like my tombstone is going to say, it's not a question of if, but when.
I know. I've known you for quite a while, and you've said this.
Yeah. So here, the current state of play is that there are two important filings that come due in the first week of July. The Bitwise filing, so our filing for Bitcoin spot ETF, and then Grayscale has a filing to convert their OTC traded grantor trust into an ETF. And I think that they represent the two most serious filings to date. On one hand, ours is backed by over 150 pages of academic research. Grayscale has gone and gotten, I think, over 4,000 public comments, and there's a lot of data that supports that you could effectively and securely operate a spot Bitcoin ETF. But we ultimately will have to see. We don't know what the SEC will do. I think our feeling is that it's been possible for a while, and know that the staff there is very thoughtful and have spent time. But it'll ultimately sort of be a decision for them to make.
We'll have to wait and see. First week of July, we'll see.
Yeah.
Well, good luck with that anyway.
Yeah. Thank you. I think that to your point, people are finding certainly there's an audience that if a Bitcoin spot ETF emerged, it'd be hugely relieving and enabling to get to buy, the milk with the label through the product you're familiar with, through the custodian and the and the back office and the trading that you're familiar with. But of course, the story of the last few years has been investors of lots of different kinds figuring out ways that they can get exposure even without that having happened. And so I think it's been fascinating to watch that unfold. When we got started a few years ago, we only had a private fund, an accredited investor only fund. And fast forward to today, we have an ETF, we have a publicly traded trust. Both have tickers. We have private funds, and we actually now also have our first SMA offering, which is a way that people can invest directly, have ownership over the coins directly with us managing the portfolio. So I think I've witnessed, there's a variety of wrappers that people are using now to get access to different parts of the space. And hopefully at some point we'll be able to add a Bitcoin spot ETF wrapper, to that list. But I think there's a lot of investors who aren't waiting.
Talk to me about the types of investors you're seeing and any of the trends you're seeing develop.
We work with a number of different types of investors at Bitwise, a few thousand self-directed high net worth individuals, tens of thousands of public shareholders of our publicly traded products, over 1,000 RAs, so independent advisory firms, a few dozen institutions, and more recently, a really fascinating development. Just in the last, I want to say 9 months, there are 7 private banks and broker-dealers that have put our products on their platforms for their advisors and clients to be able to get access to the space. And the platforms that over the last, again, I don't know if it's 9 months or 12 months, but it's been recent and ramping, approving our products to get crypto exposure. They represent $2 trillion in assets, and tens of thousands of advisors and millions of accounts. LPL is one that's public. So that's sort of the cross section. We have a sort of a broad cross section that we serve today. I think an interesting comment I could make is that there are these different audiences actually have different areas of interest. So when I go meet with our clients who are advisors, which we spend a huge amount of time with, we have relationship managers across the country. There, the conversation is often, I'm building my thesis, or I'm making my first allocations, or I'm going from my first allocations to more allocations. I'm thinking about a model allocation, and I'm doing it through the Bitwise 10, or I'm doing it through crypto equities. And we have conversations about, what do you think about publicly traded crypto equities versus the coins directly, or both, or some combination. And that is where the focus typically is in building that sort of core position into the portfolios for clients. The trajectory there, Raoul, and I can talk about what we see from individuals and other segments, but the trajectory there, in 2020, 6% of advisors said that they were allocating to crypto, client money to crypto. That grew 50% year over year into 2021 to 9%. Still small. Meaningful, because it's a giant audience, but small. This year, it's supposed to grow another 70% to 16% of advisors allocating. If you play that forward, you're at 50% of this segment having allocated by 2024 or 2025. So it still feels early because 9%, 16%, those don't feel like everyone I talk to, but the rate is what's important. And the rate is a wave that's gathering steam. So that's what we see with financial advisors, who are our core audience and an amazing constituent that I think more investors would benefit from sort of having their help around investing in crypto. And then for institutions, families, ultra high net worth, there we see interest in more specific parts of the opportunity set. So we launched a DeFi index. We launched, believe it or not, a blue chip NFT index. We have a new index coming next week, actually. We also launched our first yield-bearing interest product. It's a QP only product. It's the Bitwise US Dollar Income Fund, and that lends to the non-DeFi part of the market and generates high single-digit yields on overnight terms. We'll have our first active product later this year, actually, but can't say more on that at the moment. And then of course we have the standard index set and the SMA. And we found that has been sort of those specific exposures have been a strong area of interest for the high net worth and ultra high net worth client set who want to construct around conviction on different parts of the opportunity set.
I've seen that with what I'm doing at Exponential Asset Management is we're seeing the family offices and others looking for specific risk, because most of these guys are already crypto investors and have been for a while. And it's looking for, DeFi is very tricky because of regulation, KYC, AML, and stuff like that. But, NFTs has been very interesting. As you say, people are sub-segmenting down even by asset management style. In my world, it's, emerging crypto hedge funds, market neutral funds, multi-strat funds, all of this stuff. So it's really interesting to see the sophistication of that. And the family offices are generally always the first movers anyway, because they can take their own risks. They've got nobody to report to. And they've always led. And you kind of know where the rest of the market's going by following those guys.
I just want to note on the NFT thing, I think this is so fascinating. Between our Bitwise 10, so large cap crypto index, our public equities index, which is the BITW one, our DeFi index, we even have an index that's Bitwise 10 without Bitcoin, and our blue chip NFT index. The blue chip NFT index is down the least year to date. Which
in dollar terms, not ETH terms.
In dollar terms. Yeah. It's down 36% year to date. Yeah. So it's about where the NASDAQ is year to date, which anyways, it's so fascinating how this space is evolving. When you and I got started, there was no DeFi, there was no NFTs.
Nothing.
Yeah.
So when you're having conversations and the market's down 50, 60%, what is the Bitwise 10 down now? Must be 60?
40, I think it's 40 or 45, something like that.
Yeah, so the market's down 45%. So in my conversations, I've not met anybody who said, oh my God, the market's down. Yeah. It hasn't seemed to have changed the conversations, which is weird. In 2018, we're having conversations. People are like, oh no, I'm not getting involved in this. Have you felt that people have understood volatility more and drawdowns more and the opportunity set? Or have you seen that some people are like, whoa, this is too much for me?
Yeah. Well, I think the backdrop, of course, is that IVV's down, VTV's down, AGG's down, GLD's down over 2 months. So everything that's liquid is getting sold. And I think that people have bigger fish to fry, generally speaking, especially if they have 1 to 10% in crypto. And so it's not as in focus, I think in terms of the performance. I think the two things that we hear a lot are, what do you make of these correlations? It seems that crypto is down alongside the NASDAQ and other things. The second thing that we hear is, are people using these things? So we find that some people are sort of wanting to check in with the actual adoption of the platforms, right? Okay, the price is down. We're checking in on equities and how those businesses are looking going forward and earnings expectations and how will they be impacted by the inflation and supply chain. We're also intuitively interested in checking in on crypto and understanding, price is down on everything. What's the underlying trajectory of adoption and things getting built here, which we can talk more about. I think that's the most interesting thing. And then the third vantage point that we see, most investors who will own crypto don't own it yet. So you, me, I imagine many of the savvy investors in the Real Vision audience own some crypto, own a lot of crypto, have started building their crypto position, but a huge portion of the investing markets actually have not started building their crypto position yet, or have just started building their crypto position. So I think that changes the dynamic. And for some people, they say, this is interesting. I'm rethinking a lot of my portfolio. Maybe now is actually the time to I've had crypto on the to-do list, and maybe now is the time to dig in and understand how I would play the space. So those are the types of conversations we're having today. But to your point, it's not like 2018 when it was, the in vogue thing to say was that it was a tulip mania. And then in 2018, there was a thought that maybe this thing was going to go away forever. And then of course it didn't. And so I think that is not as much the picture that we see or hear these days.
To think of adoption, because you're probably a good way to check on this. What do you think, adjusting for the fact that the market's gone down, what do you think the year-on-year rate of change of new dollars in versus a year ago or something? Is it down, up, flat? What do you think?
When you say adoption, you mean people using Web3, or you mean investors putting money into the space?
Investors putting money into the space. So, what kind of growth or negative growth, or how are you seeing the adoption over the last 12 months?
I think that at the first half of this year, a lot of investors are either paused to try and see where the dust settles, or they're selling off some positions. There are some people who are building positions. We have a number of investors who sort of decided a dollar cost average in, and you see those inflows each week, and there's something really impressive about having had that discipline. But my guess across the broader industry would be slower year over year flows, and I think what we see from our clients is there's a mix. There's some people who are ready to go, and now they see a window. There's a lot who are saying this is going to be part of the picture now because we're rethinking our portfolios this year. But specifically, I think the last 2 months have given a lot of people pause where they want to see how things move and how the Fed responds this summer.
Yeah, even though this is generally the time you should be allocating, this is exactly what anybody who's been in the space says. This is the best time when you start getting so oversold and coming down to those long-term moving averages that encapsulate this long-term kind of exponential trend. But I've just been amazed how little rattled the institutional investors have been, and they've cut. The conversations that I've had one conversation with one of the massive giant asset management firms yesterday was the first time I heard them like, "Oh well, it's getting a bit ugly out there." Nobody else even mentioned price. They're like, "Yeah, we need to get this through our investment committee. We need a bit of this from you. We need some help there. Blah blah blah." And it's not like, and they might say, "Yeah, it's a bit ugly out there, but anyway, we need to keep moving on this." So I just think it's interesting. I don't get that sense of fear. I get the sense that industry is probably sideways. Generally, kind of adoption. It's been a flat year for adoption, generally.
Yeah. We at least get questions. We do get questions about price. And I think it comes from a place of also wanting to make sure there's nothing that they're missing. Yeah. Right? Is something we should be aware of. Again, very busy, 1 to 10%. Is there something that's happened that we're missing? Are the implications of something we've read about part of the price story? Is this price story really, liquidity is getting pulled out of all markets, and so they're getting pulled out of crypto as well? Or is there something we should understand about? So I feel like that's the dimension that we see a lot in conversations is price is down. What do we need to know? But not, I agree. Not jumping to the conclusion that there's something.
So let's move into the future a bit, and this is, obviously most of what you do is index based. So, but I just picking your brains personally about what excites you. What are you looking at thinking, these are exciting things for me that I'm just watching or getting involved in or whatever.
Yeah.
And that can be protocols, can be areas, can be anything. Just
yes,
it's just always interesting
of course.
to get everybody's radar screens up for what everybody else is looking at.
Yeah. There's so much interesting stuff going on, and I have a large portion of my own wealth in crypto, and I'm in all of our products. So I'm heavily involved in product development. So it's a good indication of what I have enthusiasm about. But things that are really top of mind for me. this might be sort of familiar to your audience, but there's really incredible yield and interest opportunities in crypto. And
ETH merge. I think people are underestimating what this means, by the way.
Yeah, I think that's right. I think that'll be an incredible moment for Ethereum in particular.
It's the risk. I think it's the risk-free rate for Web3.
Oh, that's very interesting.
Because, if you're investing in that currency block, like US dollars, you have US government bonds. So ETH, you get a yield. So you've got currency risk, which is ETH.
Yep.
But that becomes, I think, the benchmark yield for Web3. And I don't think people are thinking through this. This gives you the entire money market system that we've really been waiting for, that we've been kind of calculating off borrowing and lending rates from market makers borrowing Bitcoin and stuff. But this is true yield.
Yeah.
And it's fascinating.
It's totally fascinating. And obviously becomes deflationary in nature and moves off of proof of work. So there's so many elements of it.
There's no call necessarily on ETH going up or down, but if you're going to base a bunch of assets in ETH, okay, it becomes very interesting.
Yeah, and people knowing that they have yield on just having their reserves or part of their assets in ETH. I think it's very interesting, and I think it's be a huge development for the space. The other thing that for a lot of investors, I think the ETH merge is really forcing people to confront is the space is so heterogeneous today. I think there's a lot of investors who used to look at crypto from a distance and say, we can put all that stuff in one circle. It's called crypto. We want to know how crypto is getting regulated. We want to know if crypto is a bubble and it's going to pop. We want to know if people are using crypto. Is it make sense to invest in crypto? And of course, we know that DeFi is on a track that's different than NFTs, and that's different from the layer ones, and that's different from Bitcoin and Litecoin and the sort. But Ethereum and Bitcoin are really the two stars of the show. And for them to become so different from each other, I think will really put the exclamation mark at the end of a sentence that's been written over the last 2 years, which is there's a lot of heterogeneity in this space. And there's a lot of different structures, opportunity sets, and things to consider. And they're not all the same. They're not all going to have the same future. So that's sort of the meta trend that I think ETH2 will represent, which is, wow, what a wildly different trajectory the development of this thing and now the features of this thing are than Bitcoin, and the yield will be super interesting. And I think that the idea of it is a risk-free rate for Web3 and balances that are held primarily in digital assets is a great mental model for it. I think some people also, of course, use stable coins and the yields they can get on stable coins as sort of a
but those are driven by lending and borrowing in the market.
Yes, of course, yeah.
Well, ETH is driven by staking rewards, that are programmed in. It's very different.
Yes, yeah, it is. So I think ETH is very interesting. Again, I think in this moment, I was chatting with a multi-billion family office that's an investor with us, and they're building a cash position. They're selling some of their equities, they're selling some of their fixed income positions, they're building a cash position, and they're thinking about, is there anything that we could be doing with the cash? And here again, I think it's not well known, even if it's well known to some who are very smart on the space, that there are ways to extract income and interest rates from the space without taking directional exposure on the price of digital assets. And that is more in that second area. But I think that's very interesting. In a moment like this in the world, for investors, it's quite useful. Maybe even more useful than 2021, even though it's not a completely new phenomenon that you could earn 6% in our fund. It's that order of magnitude on just dollars. So I think that's very interesting. I think NFTs continue to be very interesting.
Have you personally gone down the NFT route, down the rabbit hole? Do you hold a few NFTs yourself?
Yeah,
Are you secretly a degen?
I'm to be honest, I feel that I'm kind of like our clients on NFTs. I actually don't have time. Like you probably know people who it's not just about IQ or knowing how to use Discord. It's also there's just the time investment that's necessary to stay current is so high. So I'll tell you my favorite NFT project that I own personally, but then the answer is that I have money in our blue chip NFT fund, and it holds punks and apes and mutant apes, and we got the ApeCoin airdrop, which is a fascinating phenomenon, by the way, just from a portfolio management perspective. We brought on a portfolio manager last year, Jennifer Thornton. She joined us from BlackRock, spent 20 years there managing hundreds of billions of dollars of equities and bonds. And now she looks after our index portfolios. And earlier this year was confronted with a major airdrop of ApeCoin. And we had to decide, what happens to the ApeCoin? Do we hold it? Do we hold it to the end of the month? Do we sell it? And it was an amount of ApeCoin that was worth half of the entire NAV of the fund. I mean, it was a huge airdrop.
Wow.
So it was very, very meaningful for investors. So that was sort of a novel thing to navigate.
What was the outcome? What did you do with it?
We ended up claiming it, of course. We held it for, I believe, 24 hours to let the market form and price to start to be discovered. And then we liquidated it. We liquidated it because our feeling was that it was not consistent with the reason that people went into the Bitwise Blue Chip NFT Index Fund. The investors in that fund, an analogy I like to give for this is it's seeking to buy these very scarce, highly prized assets. It's like buying Manhattan brownstones. And ApeCoin is on theme, but they're not non-fungible. It's a fungible.
So you took it essentially like a dividend.
We rolled it back into the fund, and then we contacted shareholders and said, you should be aware of this development, and if you'd like to take a distribution, we'll work with you on that. So that's how we navigated that. So I have most of my NFT exposure in that fund, but I want to mention, because I think you'll get a chuckle out of it. One of my favorite NFTs is I own over a dozen pudgy penguins. Are you familiar with pudgy penguins? I knew you would lose your mind.
Why have you got pudgy penguins?
I love these things. Being in the space for 5 years, I feel like one of the interesting dynamics of crypto is it's simultaneously an unbelievably serious space. It's people's money. It's regulated. Serious things can happen to investors, to operators, and it's seeking to reinvent really important systems. On the other end of the spectrum, it's kind of a playful and silly space, and there's a lot of tinkering and jokes and collegiality and frivolity and that type of thing. So I love these fat penguins because there's such a vibe. I feel like they encapsulate an aspect of crypto, sort of the whimsical, optimistic.
But you see, look at your face. Your face is grinning from ear to ear.
Yeah.
And that's what NFTs do.
Yeah.
You don't see that, but NFTs. Look, we know it's ridiculous. Yeah, but we love it because it creates a community. It creates a focal point. It's humor. It's like the one I bought about last weekend, I think it was this new NFT came out called Wrecked Guy, and it's an amazing one. And he's drinking from a bottle of hopium. Not hopium, copium, basically. It's about being wrecked in NFTs, and it's like the space. That was a huge sellout very quickly. Because the space wants to laugh at itself as well. The ridiculousness of what we're all going through at one moment in time is wonderful.
There you go. That's what I love about penguins is that they're just obviously absurd and ridiculous. And then as an investment, I have the money in the index fund that owns apes and punks and I think nouns might be in there now, and that's interesting. But just on a personal level,
what would make me really laugh is we wind forwards 5 years. you're now a retired multi-billionaire because your Pudgy Penguins portfolio has gone up so much.
Yeah, that would be fascinating. Oh my gosh, I think two or 3 years ago I did an interview on Planet Money, and it was back in the era of CryptoKitties. I don't know if you remember that. That was sort of the first, and I remember just thinking like, this is so ridiculous, and I said something to that extent. But fast forward, here we are today. I think that one of the big ideas behind NFTs, which people have heard different interpretations of this, but one of the ways I like to think about it is, if I said to you, Raoul, how much do you pay for your shoes? Maybe a few $100s. I don't know how you roll. But
I roll with Converse and flip-flops, so I'm different.
Right, so then maybe not for you, but people spend a few $100s on dress shoes. But if I said, what would you be more upset to lose? All of your text messages or your dress shoes, or all of your emails or your dress shoes, or all of your photos or your dress shoes, you would be, it's obvious to everyone, listening, you, me, that you would be devastated or much more upset to lose those digital objects, but you didn't pay anything for them. And so the struggle of the internet and the digital world and the internet era thus far has been, it's obvious to all of us that there's value in those text messages, in your photos, in your emails, but there hasn't been a way to price it. There's been no way to price these digital objects. And what NFTs represent from my perspective is people trying to figure out how to price digital objects for the first time. And we don't agree, which is why they're volatile. The volatility represents us all disagreeing about it. But the big idea is there's now, through blockchains, a way to transfer title, basically, to transfer ownership. And we're beginning the grand experiment of figuring out how to price these digital objects that we all know are valuable, but have never really had a way of trading around and figuring out.
That's a fabulous perspective. The way I've also looked at this is the trend towards the digitization of everything means generally that all the costs go to zero. So whether it's cloud compute or computing power or anything, right? Telephone calls, everything goes to zero because it's infinitely creatable. That's a big problem until you create digital scarcity. Because once you do, you can now stop that trend, and then the digitization of the world functions as an economic system in the way that exactly you said, is suddenly these digital things have a achievable value that is transferable and can hold their value versus all the other digital things that go to zero, which is amazing.
Yeah. I think it's sort of a new paradigm for what's possible on the internet. And I think it's one of, again, zooming way out, it's one of the reasons that I think a lot of people say this is an area where the future could be better and different than just the trajectory that we've been building on for the last decade or two, because it's fundamentally changed what's possible in the future. So I think it's quite interesting. Hunter,
look, fantastic as ever to catch up. Covered a lot of ground, lots of interesting stuff, and let's see how this all plays out.
Yeah,
but as
absolutely.
ever,
great
thanks for your time.
Conversation. Yep. All right.
Hey there, revolutionaries. Thanks for tuning in. For more content like this, head over to realvision.com/crypto and get unfiltered access to the most brilliant minds in finance and crypto. Join our community of lifelong learners for exclusive access, unparalleled education, and unbiased insights.